the smartest, the big money, whatever you want to call it, people like Ron Barron, like Elon Musk, like Steve Wesley, who was on the Tesla board, he was saying, forget hybrids.
I know you love hybrids. That's not going to last either. They're too expensive and they're not effective enough, and they're not going to be part of the mix either. It's going to be all electric. And he said the other day that he's negotiating to sell autonomous driving for some other cars too. No one has the compute, no one has the data.
All that and more. So let's get to it. Tesla stock is up in the pre-market yet again, over 1.25%, sitting at 172.50. For the week, Tesla is up over 18%. But lest we forget, Tesla is still down over 5% for the month, over 30% for the year. This just shows the volatility that comes with battling it out with TSLA. Is Tesla destined to reclaim all of their losses by the end of the year?
When we talk about Ford and GM, we know they've moved away from EVs. Hybrid seems to be the better way to go. Is Ford in a good position?
Yeah, I thought it was really interesting. If you look at their release, they talked about freedom of choice and really kind of pushing that options for consumers. So if you want an internal combustion engine vehicle, a hybrid, or an EV, they have them, and it's really up to the consumers to make the choices now. So a big kind of shift in kind of the messaging from what we've seen over the past couple of years, but they seem to have the hybrids for consumers if they want them.
Note that this is a choice from Ford. Instead of biting the bullet, learning how to manufacture battery electric vehicles from the ground up, reduce the cost to actually make these things effectively, offer a superior product for their loyal consumers, this is a choice from Ford. These choices now will have ramifications when we get closer to 2030.
What's interesting is I know that the committees have been advising GM and Ford to move more towards hybrids because people aren't ready for EVs. But the smartest, the big money, whatever you want to call it, people like Ron Barron, like Elon Musk, like Steve Wesley, who was on the Tesla board, he was saying, forget hybrids. That's not what it is because, batteries are expensive, et cetera, that it's EVs, but we just need to get there. What are you thinking here right now, William?
Yeah, I think that's the reality of it, but, the hybrids are a gateway drug to EV adoption.
What? I've always called it the stepping stone, but a gateway drug to electric. Me likey a lot.
People showed last year that they're not willing to take the 2 feet jump into the EV marketplace, but they might be willing to put one leg in and take the hybrid. And then as they become familiar with how often they're leveraging it, the range anxiety goes away. Maybe they're easing themselves into the full adoption of the EV. And so I think that this is a smart way for Ford to break out their 3 lines of business, show that the 2 lines of business that we're most used to seeing are very healthy, revenue positive, revenue generative, but be able to point to the fact that this little silo over here that we call EV does have tax incentives. It is here to stay. We are committed to it, but let's be clear about where our losses are and where they're coming from, and don't commingle that with the commercial business or with the tried and true blue business, as they call it.
Yeah. So what are the best plays? I mean, you also have Stellantis when we think about the big 3. What is the takeaway from the earnings this quarter and what we're hoping for going forward, William? I mean, are these going to be the competitive players? They made it through all the strikes and everything and seem to be well positioned, or no? What do you think? Are these winning stocks?
Well, I think they're tried and true. They're here to stay. I mean, we're talking about companies that have been around for over 100 years, a couple of them. So they're not going anywhere. What they've shown us through this last quarter, I think, is that they're going to stick to what made them who they are. They're not going to go and show a year of losses to completely abandon their supply chain, completely abandon, their traditional methods for making vehicles. And so they're going to innovate slower. And that's what Wall Street has shown that they want them to do. The institutional investor base has said, I want predictability. I want to see that you are making cars, that you're making them cheap enough to make revenue per car. And that's what I'm asking for when I'm buying your stock. that's a different story than the Tesla investor or the EV investor who's willing to see losses because they're investing in innovation and they're investing for 10 years out as opposed to 10 months out.
And that, in a nutshell, is why legacy auto is going to struggle mightily in the next 5 to 10 years. Tried and true is what's going to send you to the breadline, much like Kodak and Blockbuster. Too big to fail. These companies have been around for 100 years. Until they're not. I'm serious about this. No f***ing bailouts. It's their greed that didn't allow them to see what they should have saw when Tesla came out with the Model S. Holy balls, we need to pivot. If this ragtag startup can create the car of the year and it's electric, maybe we should pivot. I mean, it's staring you in the face. Lo and behold, now Tesla's making money hand over fist, poised to take the lion's share of the eventual auto industry market because legacy auto failed to acknowledge the future of their own industry.
Tesla has captured everyone's attention. You have been probably the longest Tesla shareholder and one of the most outspoken bulls out there on this. You are a huge believer in Elon Musk, and I think you just came back from a trip to visit both SpaceX and Tesla.
Yeah. So about the markets first, just briefly about that, is that we're long-term investors. We visit companies in which we invest. We study the businesses, look to opportunities, bet on people. So I started in the business in 1970, and I was living in my friend's basement. I was in debt. In 1982, we started Baron Capital, had 10 million under management with an M. Now in 1992, 100 million, now it's 43 billion. And we've made our clients 44 billion in profits since we started. And I'm hoping that we make a double in the next 5 or 6, 7 years. And I think we'll make a double again 5 or 6 or 7 years after that. So I am long-term all the way in everything we're doing. And I asked you, to not introduce me as a Tesla bull, because that sounds like the only thing about it.
Yeah, I didn't know why
that
it said investor, yeah.
So I asked you to do it. Please make me an investor. I am incredibly bullish about the opportunities for Tesla, but I don't want people to think this is the only thing he does one way. And
no, but it is your largest holding, to be fair. Tesla is your largest holding. SpaceX is your second largest holding.
Right.
You have a long list of investments, but these two, because you got in so early, are your two largest holdings.
Well, we have 400 investments. And the top 30, which is that sheet, represent about 56, 57% of our assets. And by being a long-term investor, you can actually do quite well. And it's hard for most people to do better than the stock markets. I recommend people invest in index funds, passive investing. And if you did that, that's a good way to hedge against inflation. So inflation makes everything worth twice. It costs twice as much every 14 or 15 years, 4%, 5% a year. Sometimes it gets down a little bit, but it's 4 or 5% a year for my whole lifetime. And so the way you hedge against that is investing in good growth businesses and staying with them for the long term. So 98% or 97% of our assets beat the market, 96% top 20, and 45% are the top 1%. In fact, Barron Partners Fund, the #1 fund in the United States since 2003.
Hope you guys were taking notes. Ron Barron giving out financial nuggets for free 99.
I think we're going to make 20 times in SpaceX over the next 15 years. I think we're going to make a quadruple in the next 6 or 7.
What do you think right now? The stock came out, the earnings this week came out. It was a disappointment for the quarter. It was the worst cash flow quarter that the company's seen in its history, but the stock was up 12% because Elon started talking about what he sees in the future and the idea of bringing out cheaper cars to go through these things. Where do you stand on what the company should be valued?
So I know Joe's not a big believer in electric cars because he likes his Porsche. But I think all the cars are going to be electric. And I think this hybrid is just a sort of a holding off action so the automobile companies don't have to lose money on the electric cars.
The stepping stone to the electric vehicle?
But the electric cars, I think, is going to be all the cars 10, 15 years from now. And I think hybrids, I know you love hybrids, that's not going to last either. They're too expensive and they're not effective enough, and they're not going to be part of the mix either. So it's going to be all electric.
When you're talking about an autonomous future, the hybrid just can't work. Maintenance, the fuel economy, it just doesn't work. In the short term, there will be money to be made. It is a natural stepping stone at the moment for individuals making this extremely large purchase and dramatic lifestyle change. There's just different things you have to worry about with owning an electric vehicle than you would an internal combustion engine. But in the next 5 years, it's going to be painfully apparent that the internal combustion engine, in any fashion, is going to be put out to pasture.
The reason the stock is down is not because of the quarter. The reason the stock is down...
Well, the stock's up because of the stuff that he
Well,
said.
the stock's down so much.
Well, it's down 35% year to
Yeah.
date. It's down 1%, or it's up 1% over the course of the last year.
Yeah, it's not so exciting to be up 1% in a year when everything is, the market is so strong. I don't worry about short term, but I do look around all the time and see everyone getting rich, and I'm not poor, but I haven't made a lot of progress in the last 3 years. So therefore, I think it's like a rubber band. I'm going to catch up again. So what I think about the reason the stock is down is because people were concerned that he was going to abandon the idea of having a low-cost car and go all into robotaxis. That's the reason the stock is down. And then there was a report in Reuters said he's canceling this new factory that's going to make low-cost cars, $25,000 cars, competition from China. So there's only one company in China that's profitable, by the way. That's BYD, Warren's company, Buffett's company. And that's a company makes $1 billion a quarter, and our company makes $4 billion a quarter. No one else makes money. Ford loses so much. General Motors, everyone loses money on this. It's much more complicated to make these cars.
It's not as easy as Tesla makes it look.
So what's the reason it's going to go up, and when?
Oh, it's going to go up huge.
When?
And now. I mean, now is the bottom.
Okay.
No hesitation. It's going to go up now.
And so what they're doing is they're going into robo-taxis, and they're going to make the low-cost car. So they're making the low-cost car, except they're making it, they have excess capacity right now. They have capacity to make 3 million cars a year. They're making 1.8 million. So the 1.2 million cars they can make extra in an existing facility with no more capital, and they're not going to make the cars direct cost as cheaply as they did before, as they expected to. But overall, until they expect to do 5 million of these new cars.
Can I ask you a robotaxi question? Because that is, I think, the future of this company,
Yes.
and a lot of the value is relying on that.
Mm-hmm.
The question is what you think the genuine timing of a robotaxi that's reliant on cameras only, and this has always been the question about can you do it with just cameras relative to what Waymo and Cruise have done, and there's been even questions about that, using the radar and the LiDAR and the whole rig that lives on those vehicles.
Well, we have a small investment in Cruise because I wanted to see what they're doing. And Waymo is, their cars are $200,000, $250,000.
Because of all of the sensors and all of
And they're trying to take cost out.
That's just way too much. When you're talking about the life of the vehicle, the life of the sensors, you're going to have to charge a little bit more than you would for fares when compared to a Model Y or a Model 3 with the vision-only system. Let's not even mention the RoboTaxi, which will be considerably cheaper than the Model Y and the Model 3. Tesla's approach is cost-effective, and those cost savings are going to get passed on to the consumer at ridiculously low prices. Waymo, Cruise, they bungle all the time, yet they're still able to collect taxi fares. Tesla's not going to put their product out there until they know for certain that it's going to be absolutely fantastic. The question remains, when can they do it?
And for us, it's software. And so basically, the advantage that we have right now at Tesla is that they've sold 6 million cars, and 3.5 or 4 million are collecting data. So the data is what's really valuable. They're doubling their amount of compute every 90 days.
I don't disagree with you. The question is a timing question of how quickly you can actually put these things into the wild.
I was with the autonomous driving people and also the compute people. And then afterwards, they said to me, Ron, would you like to see how it works? We've made unbelievable advances. The first 11 versions had to be designed so that they had to code every single thing that happened.
Right, and now it's all AI.
It was impossible. And so therefore, they weren't making progress for 2 or 3 years. They were at a plateau. And now what's happened, they have version 12. They have all this enormous amounts of data, and now they have compute to figure out. Humans can't do it. Now they have compute to figure everything out. And so now you're on the verge with autonomous driving in your car. So I said, okay, show me. So we do the few hours, couple, 3 hours, and then before I'm going to go back to New York, I say, okay, so I want to see how it works. So we go into a parking lot, and we get into the car, and I have an analyst with me, and then they had the compute person, and they had a investor person. And so we're sitting in the car, and so where do you want to go? So I want to see Steve Jobs' house. And say, okay, so they punch in the address, and we get into the car drives around by itself. Didn't do it, all we did is punch it in. Drive around the parking lot, goes to the road, there's traffic going both ways, it looks both ways, looking for an entry to get in, gets an entry, pulls in, makes a left-hand turn, drives right behind cars in front of us, there's a stop sign, first car stops, goes, second car stops, goes, we pull up to the stop sign, car looks both directions, makes a right-hand turn. Just drives. And then all of a sudden there's a pedestrian crossing the street. The car stops to let the pedestrian cross the street. The pedestrian, I don't know if I was being set up on this, but the pedestrian waves, and then the car starts going again. Then it pulls up, then it makes a left-hand turn, and then goes in front of Steve Jobs' house. It's a nice house. It was just a house, though. I was expecting a house, but it was a house.
Long story short, what Ron is trying to say is, it's already here. It's here, and it's only going to continue to get better as it gets flooded with the millions and millions of vehicles data already on the road.
I thought the idea had been that you're going to sell a lot of cars, so as a result of that, once they have those cars out there, you'll sell autonomous driving. And he said the other day that he's negotiating to sell autonomous driving for some other cars too. No one has the compute, no one has the data.
People think this is years away, 5, 10 years away, and it very well could be. But it could also be right around the corner. And unless you've actually experienced Tesla FSD, it's really hard to grasp that this vehicle on vision and neural nets is actually driving better than individuals like myself.
And that's the long-term thing. If Tesla's everywhere, just like the Tesla charging.
If they're making cars, they make $7,000 in profit a car for a car they're selling for $35,000, minus the $7,500 credit.
What's your timing? But just give me the timing. That's the whole game.
Now. It's now.
Tell him again, Ron. Tell him again. It's happening right now.
Now. It's now.
In conclusion, Ford, GM, they did pretty good on their earnings. Ford actually divulging the losses from the EV side of their business is quite telling. But everybody on the planet knows that this is where the industry is heading. Hopefully the pursuit of hybrid vehicles will not impede the progress of Ford and GM when it comes to their battery electric offering. Furthermore, they need to make sure those vehicles have the knack so they can take advantage of the Tesla supercharging network, a camera suite, and space for a computer so that their consumers can also take advantage of FSD. The NACs will be on every EV in the future, and there will be FSD on every vehicle as well. Every other auto manufacturer needs to understand this and make the necessary changes to their lineups. Just do it now. Just do it now and save yourself the heartache in the future. And Ron Barron giving out financial nuggets for free 99. His two biggest holdings, Tesla and SPACEX, advises investors that they can't go wrong being long-term investors, says Tesla is at the bottom and has nowhere to go but up from here, and that ROBOTAXI is not only the future, but it's actually here. Like I've said many times before, it's not perfect, but it is learning at an exponential rate. It is only going to get better from here. That's all I got for you today. Be easy. Peace.